Yo, this is OZ from OzFx and welcome back to the Smart Money Bootcamp. In today's video, we're going to be going over confirmation entries. When I was first taught this, it was called double mitigation. I myself don't really call it double mitigation anymore because I think some people get confused just by the name. They think that it is just an order block or an institutional candle being mitigated twice, and that is not what it is. So I like to go with the term confirmation entry, which is the original smart money term as I understand it. But let's get right into it. Okay, confirmation entries. Confirmation entries is a strategy that helps you determine whether the market is going to go in the direction that you're planning to trade. Confirmation entries, order block 2.0, double mitigation, risk or safe entry. These are all based on the same thing. They are all the same thing. And how do you know if your order block will hold? Well, plain and simply, you just don't. And that's where confirmation entries come into play. Confirmation entries are something that I do almost all the time. And one thing about confirmation entries that you need to understand is that you need to be patient. You need to not be so trigger friendly. In this business of trading, the ones who wait are the ones who get paid. Literally, you can see over here the steps to it. Plain and simple are you have your point of interest, and then you have to be patient, wait for your confirmation, and then you enter. All right, so when marking out your point of interest on your higher time frame chart, instead of trading right off those zones alone, you can wait for what we like to call a confirmation entry to confirm that the market is going to go in the desired direction. Because think about this. This is something that I always say. The banks are going to show you which direction that they want to go. They're going to show you their hand. They're going to show you their cards. And how do you know when they're showing you that? You look for a break of structure. We start by placing an alarm at our point of interest on our charts. That could be an order block. That could be a fair value gap. It could be an institutional support or resistance line. As price hits our point of interest, we study the chart looking for previous structure or wait for a new structure to be made. What we are waiting for to happen is essentially a fractal shift, a minor structure shift, or a change of character. These are all essentially the same thing. If price does give us a fractal shift of some kind, we look at what the chart left behind. Is there an order block, fair value gap? And is it in the fib zone if there is? After price breaks some kind of structure to the desired direction of the trade, we are confirmed that the market is reacting to our point of interest, and we can look to enter on the setup that the market has left behind. So you're kind of finding one setup and then waiting for another setup too. We can also use Wyckoff in this situation as our confirmation at our point of interest. Wyckoff is literally a form of confirmation. So the steps to a confirmation entry. Step 1, you find your point of interest, your order block or your fair value gap most likely. 2 is you wait for price to come to your point of interest. You don't just enter right away. You don't. Step 3, once price is at your point of interest, you wait for Wyckoff or a fractal shift on a lower time frame. What do I mean by fractal shift? I mean if price is making lower lows and lower highs and you're looking for a buy, you want to wait for a fractal shift to the upside. So if you're having lower lows and lower highs, you want to wait for a higher high breaking the most recent lower high. That's what a fractal shift is. If one of these two conditions are met, look for order blocks, fair value gap, and align your fib. If the chart meets your trading plan at this point, set your entry on the order block, fair value gap, or fib that is left behind in the confirmation entry. And if some of this is not making sense, don't worry, I'm going to show you examples. So right here we have a crude example, something that I drew up. So say this right here that I have marked POI. This is your order block, and it took liquidity over here and then broke structure to the upside. Now, in most cases, a lot of traders are going to have a pending order sitting right here. Instead, you want to have an alarm somewhere down here, and you want to see what happens when it gets to your point of interest, because there's 2 things that could happen, or actually 3. So if you see how price is coming down, making lower lows and lower highs until it gets to this point, price could easily come back up here, make another lower low, make another lower low, make another lower low, and then make another lower low, leaving your setup to a loss. What you want to look for is, okay, what structures are left behind? So we got this structure right here, or you want to look at the structure that is formed inside as it's starting to move around inside of your point of interest or reacting off of your point of interest. And what do we have here? Price is coming in, makes structure right here, sweeps that liquidity, and then makes a fractal shift to the upside, taking out this structure that was right in here, leaving behind an order block most likely in here. And this is your entry right here. Hopefully that makes sense. So what you're waiting for is price to come to your point of interest, make some kind of structure, or even break a structure like this one over here, and then you want to see it come back to whatever order block. You want to see it come back to whatever order block is left behind, and then that's where your entry is. And to be clear, say this whole chart right here is on a 1 hour or a 4 hour. When you're looking for this right here, the next setup, you want to be looking for it on a lower time frame. You could wait for it to show up on your time frame, but you're most likely going to be waiting for a while, or you're just going to miss it altogether and you're not even going to see it happen. And another thing about this is this is not, I repeat, this is not always going to happen. You may miss some trades when you're waiting for this. So you have to decide whether you're going to wait for this every time, if you're going to wait for it sometimes, or what is your criteria to make you wait for this, and what is your criteria to just enter off of a point of interest like this without waiting for a confirmation entry. So what is a confirmation entry? It's just an entry or a market profile such as this that's showing you that price wants to go up. All right, now let's look at some charts. All right, so here we are on Euro USD. Let me make this full screen. Here we are. We're on the full screen now, and I want to show you an example of a confirmation entry. Okay, so this one literally is one that played out completely on this time frame, and there's actually like 2 examples in one. So for instance, right here we have your point of interest. You have your order block. This gray box is my order block, and then we have price breakout, and it breaks structure right here, breaks structure, and then it returns back into our point of interest. Instead of just going long right here, we don't know that this is going to continue up until price shows us that it's going up. So for instance, we have price starting to make structure in here, right? Price breaks out, shows us that it's going to the upside, and then comes back in to another order block right here. And then it shows it again. And for instance, it even happens again. If you didn't like this first one right here, price comes down, it makes another order block right here. Let me get rid of this one. Price makes another order block right here, and it also breaks structure to the upside again. This is the last high. Price breaks it, makes another high here, and then returns down to the order block again. And all of this is based off of this first order block right here. It breaks structure to the upside, comes back in, no entry here. It breaks up to the upside. And if you don't like this one because all it did was break internal structure here, then you can wait for this one, because this is now external structure. That price breaks through, makes another high, and then returns into an order block to go to the upside. So I literally just showed you 2 examples in one trade setup. The market is almost always going to give you clues to the way that price wants to go. If I was going to draw it out for you, simply this is what you're looking for. Say price is doing this, say price does one of these, and then does this, right? And you have an order block right here. You have an order block right here, and then you want to see price coming down. Then price starts coming back down to your order block. And there's 2 things that you could wait for. You could wait for price to engineer some internal liquidity here and break out, and then this could be enough of a break, or you can wait for the last high that pushed to the most recent low to get taken out. So it takes out another high, leaves behind an order block right here, comes back. Right here is your entry. Say this was your order block, that's your entry. And you have internal structure right here, and you have external structure right here that is broken. So you need to decide whether you want to wait for this external structure to be taken out, or if you just want to wait for the internal structure. Internal structure is structure that has not made a new low or a new high, depending on which way you're taking the market. See how this high right here broke through this low, created a low right here, and then price stayed inside of that low. This structure in here is considered internal structure, and sometimes you need to wait for the external structure to be taken out to consider taking a confirmation entry. And I don't have a guideline for when you wait for which one. That's literally up to you. That's some of the mystery of the market, and at some points you just need to make a decision on what you want to do. Alright guys, so I think I've laid down enough for you to be able to study confirmation entries, go back in your charts, back test it, forward test it. This is a strategy that I believe takes a lot of traders to the next level, because a lot of times you would just have your point of interest like this here, and like I said in the beginning of the video, it would just blow through it, just making lower lows and lower highs the whole way through. If you wait to see a fractal shift showing that price is in fact rejecting off of your area, it should give you all the more confidence. Alright guys, that is it for confirmation entries. I will catch you on the next one.